Hello, everybody. It is Justin Finn Wealth Advisors. Hope you're doing well. It's Thursday, October 3rd, 2024. So where are we in the week? The beginning of the week, we started a brand new quarter. So October 1st was the beginning of fourth quarter 2024. And throughout the week, there's also been a lot of geopolitical mess in the Middle East with Israel and Iran and Lebanon. And so certainly very chaotic over there at the moment. We've seen oil spike as a result, and we've seen the VIX, which is the fear gauge in the market, move much higher too this week, and that's all based on the uncertainty of what's going on. And then back at home, back here in the United States, we have a port strike. So this is the largest dock strike that we've seen in 50 years. It's running from Maine all the way down to Texas. So that at the moment, if this continues on for weeks, then it's going to certainly start to have implications, probably with some inflationary implications from the strike. Market has then sold off as expected with all the events that have been taking place. So it has been quite the start to fourth quarter. Now tomorrow is the jobs report number. Okay, so we'll get the jobs number, unemployment number for the month of September. And this is certainly a data point that the Fed will be watching very closely. And the expectations are that for the month of September that there'd be 150,000 jobs created, okay? And so it looks like we're going to have continued decline in the amount of jobs that have created, and unemployment sits at 4.2%. Now, what is is it going to come in at that number? Does it need to come in at that number? Can it be lower? What if it goes, what if it's a lot more jobs were created in September? So I think the Federal Reserve is going to look at this as if it comes in around 150,000 as expected. My feeling is that's exactly what the Fed would like to see, and they'll be able to continue a gradual rate cut. And that's what the market would like to see, is some stability, know what the deal is, and see rates go down over time. If it's a really big miss, then that could be an indication that the Fed's going to have to make some drastic moves and be a lot quicker with rate cuts. And that would not be good news for the markets because ultimately that could be a signal that we're headed into a recession. On the flip side, if it's bullish and there's a lot of jobs created, a lot more created, then I think that gives the Fed pause, and they won't maybe cut as quickly, or maybe they'll be more in this 25 basis point type of rate cut. Now, here's the other piece to this, is the Federal Reserve does not meet again until November 6th, 7th, which is after the election. And there is another jobs report that will come before the Fed meets again on November 1st. So we have jobs report tomorrow, jobs report November 1st, an election, and then the Federal Reserve meets. So a lot of stuff is going to take place between now and the next Federal Reserve meeting. But we'll be looking tomorrow, see what happens with tomorrow morning, see what happens with the jobs number. So anyway, hope you've had a good week, and I'll check back in tomorrow.